Hi, this is Stewart Scothorn with the Long-Term Care Link. Let me talk to you today about some revolutionary products that I think make a lot of sense for people that are looking at trying to take care of that long-term care coverage issue that's out there for almost all of us. What are we doing to take care of that? And today, instead of looking at the traditional insurance that long-term care is available through, albeit only two carriers, um, what do you have that's available on the hybrid side? There really is two product types. One of them is through life insurance and one of them is through an annuity. And so I'm kind of briefly going to go through what that could look like and why that's a benefit to you. So first of all, on anything that you were going to have set aside on life insurance, keep in mind what you would be doing is buying essentially a whole life policy, and as a rider or additional benefit, you would have long-term care coverage that would be a function of the money that you put in, setting up, should you need it, the ability to pull from those resources and whatever returns that you're getting, and see that money applied towards whatever that cost is. What is the benefit of that? Well, the benefit is you've got a couple of things that happen. You still have a life insurance policy that will continue to provide a death benefit when you do die. So that policy is still the policy. Two, you didn't pay for a premium, right? There wasn't a premium each month for long-term care insurance. There was a premium for life insurance, but there wasn't a premium for the long-term care portion. That just happened to be something that was added as an additional rider. How does that pay out? Where does it pay out? Given the months that you're going to need or the time frame, it would be paid out on a monthly basis, and it would be based really on whatever that investment in your life insurance policy was. Obviously, we'd love to be able to walk through those scenarios with you on this product. But let me just kind of fast forward to what I think we have noticed is probably a product that most of our clients gravitate towards. And that's the annuity with the long-term care rider. Why does that make the most sense? Well, it is a fixed index annuity that continues to earn money and has the ability to pay the long-term care cost should that become something that's available. Now, let me just give you a for instance. Even day one, in some cases, you'll have a 300% benefit day one on whatever you put in. What do I mean by that? Well, if you have $100,000 invested in an annuity, you have $300,000 in long-term care benefits day one. And obviously, as that amount, the 100,000 goes up based on the investment that you decide to put it in as a fixed index annuity. Obviously, those benefits over time go up as well. So what I would encourage you to do is to know it's always going to be something that you'll see continually grow. But the other side of it is, I said before, and maybe you heard me, but 70% of all of us will need this long-term care insurance. Well, what if you're one of the 30% that don't? You didn't lose anything. You have an asset that's continued to make money. You are now in our opinion, one of the best positions. You didn't need that money set aside for long-term care. And now, obviously, you've got an asset that continued to grow. On the other hand, if you did need it, it was there. It covered whatever that expense was that we really had planned out. And now you were in a much better position to be able to say, look, that particular issue on long-term care, I've got taken care of. Now, just to give you a for instance, that compared to what long-term care insurance is, that insurance even today is literally jumping month by month. In some of the older policies that I've seen, every year it may go up by as much as 100% in terms of the premium. I have no idea how high that's going to go. There are a lot of people that just had to drop it because it got too expensive. How do you mitigate that risk? Because there's no insurance company that won't raise that premium if their costs go up. That's kind of the way insurance works. If their claims are this high, then they're going to raise the premiums to be able to cover whatever that cost is. So if you have both a life insurance, that hybrid product, or what we consider to be, with the annuity, what we like at the annuity link to really look at as an option, you have an asset essentially that continues to grow, that is available to go ahead and solve that long-term care coverage question. So in our minds, that particular product will then take the place without having to pay. Keep in mind, you're not worrying about doubling the premium, or am I even going to be able to afford it in 10 years or 20 years or 30 years? Because you got to remember, you may not use that for 30 years and you have premiums that you paid all 30 of those years. Well, that money is gone if you were in the traditional long-term care insurance. If, on the other hand, you had life insurance or an annuity, that continued to be a product that would continue to gain in value. So those are the hybrid options that are available. And let me just encourage you to go ahead and click the button below, set an appointment with one of our agents to kind of walk through a scenario to see what's available. But let me urge you, this might be the absolute biggest thing that has destroyed more people's nest egg than anything that we have seen. And I don't anticipate that that's going to change just because healthcare costs continue to rise. And this is something people are reticent. They don't want to address it. They don't want to have these conversations. But again, this is something that we need to be real about.